Welcome to the Atlanta Startup Podcast. I am so glad you're here. This is Anastasia Nicole. She is amazing. She is the new managing partner at Techstars Atlanta. So thanks for coming on the podcast to talk about what's going on, all things Atlanta and startups.
No, thank you for having me. I'm super excited to be here. Can't wait to get into the conversation.
Me too. There's so much going on in Atlanta. Techstars is adding such a great vibe. What I want to do though is wind it back, and for those in the community that don't yet know you, I want to focus a little bit on Anastasia. Let's rewind. Tell me what you were doing before you joined Techstars.
Oh, so before I joined Techstars, in this iteration, I was at Techstars. So I was the managing director of our Techstars program in Alabama, our tech program. Prior to that, I was working with our Atlanta programs as an investment principal. I was doing sourcing and scouting. And then before that, I was at Founder Gym as the director of programs, where I was teaching underserved founders how to fundraise, like giving them that insider baseball. But that came from having spent about 3 years at Shadow Ventures as a managing director of their incubator and as a senior associate. And then before that, just working at a bunch of different startups around. So, yeah.
Where is Shadow Ventures?
So Shadow Ventures was based here out of Atlanta. They're mostly a distributed remote team, prop tech, early stage, so seed stage prop tech. I would say, I think right now, they're all kind of scattered. Like when I think about, so it was founded in Atlanta, KP Reddy was the GP, is still the GP. KP has since moved to the Bay Area. He has a lot of strong feelings. I'll let him tell those strong feelings.
Right, that's KP's story.
That's his story, but he has a lot of strong feelings about the Bay Area, which he's not wrong. And then I know he also has some folks in Colorado, some folks still here. So they're just very distributed. But their focus is the built environment. And when I came in when they were called Built Tech Labs to kind of help build out their incubator process and test the thesis.
So why were you so drawn to innovation at the early stages?
Oh, that's a good question. I don't think it's that I was drawn to innovation. I think I was drawn to entrepreneurship.
Yeah.
So like I tell people, I'm an elder millennial. When I graduated college, it was during the 08 recession, and I couldn't find a job because sometimes you can't find a job. And so I was very entrepreneurial in building my daughter school for merchandising. And I was selling clothes online, like on eBay, which was a thing people did. So I would go to the thrift store and I would buy a whole bunch of stuff because I went to school for merchandising, make it cute, sell it on eBay. That was like my
You were like an early thread up.
Right, right. Well, and it's funny because that's how Nasty Gal, it was the person, that's how she got her start. And so it was a whole bunch of girls doing this at the time because we fell back on what we knew, right? And so I was doing that. I was freelance writing. I was a stylist. I was working in the mall. I had like 10 jobs all at once to pull together, paying my student loan payments.
Entrepreneurs are like that.
Right.
They are like jack of all trades, have to hustle, do it all.
Yeah. You have to figure it out. And that's what I tell people, like, even right now, when we talk about what's going on in the economy, you got to figure it out. Like, I want to empower young people, entrepreneurs, anybody who's looking at what's going on right now and they're freaking out. Everything is figure outable. Just go out and do it. You will learn eventually what it is as you go out and you try different things. And so I think that put me in a position where I was always willing to say, I'm right on top of that, Rose. Like from don't tell mom the babysitter's dead. So it was always like, oh, I can figure things out. I can do this. So when opportunities presented themselves, I was like, oh no, this seems cool. I can do this. It was like, hey, you want to go work at a showroom and you'll be the person to open the Southeast territory. Sure, everything's figured out. I can do this. Okay, so from there, hey, we got this ed tech company that's based in Norcross. And you're going to be selling into Texas. We've never sold into Texas. You're selling computers to Texas. I was like, I can figure it out, And then from there, I was like, well, I want to get back into fashion and focus on sustainability. Sustainability had always been a passion of mine. And a friend connected me with Dana Barrett at the time, who was doing her show, and Dana was like, I got this other friend who you need to meet. Do not move from Atlanta. Do not leave Atlanta. And so I was like, okay. So I go and I sit down, and it's KP, who at the time was the CEO of Soft Health Nation. And so he's like, I didn't even know I was getting a job. I literally was just like, oh, this seems cool what they're doing. I want to learn more about it. And I was always like, hey, I'm up for a challenge and I can figure it out. And that lends itself to you working with a lot of entrepreneurs, right? Because you learn so much on the ground floor. Like I tell people, I've always been employee number one, number two at companies. Because when you come in, you're hiring me for sales, but I'm not just doing sales. I'm doing sales, I'm doing marketing, I'm doing a little bit of HR because maybe somebody on the team does not know how to go and call a broker and get health insurance. You know, like I'm doing ops. Like when I worked at Shadow, it was like, hey, we have to do fund docs. And I'm like, I can figure it out. I got Google. You know, I'm very big on like everything is figure outable. And I also just like, hey, this seems interesting. This seems like a great opportunity to learn. And I'm just naturally curious.
Yeah.
And so I very rarely does someone put something in front of me as a challenge. And I'm like, oh no, I just absolutely can't do that.
Well, all the entrepreneurs listening are like, oh, I want to know more. And some that may not know, even, they've probably heard the name, but they may not understand what Techstars is, who it is today. Could you share a little bit more for those in the audience that may not know Techstars well, what the program is today?
Yeah, and so I think when you talk about Techstars, you have to talk about startup communities, right? Because that is deeply entrenched in what Techstars is and how Techstars is continuing to evolve, right? So yes, it's an accelerator program. Yes, there's equity. Yes, we're going to put a bunch of support around you. What I see that works well with Techstars is I get 10 to 12 entrepreneurs in a room together who are all building at a similar stage. And everybody has the same problems, but how they approach them are different, you know? So you'll have someone on a whiteboard trying to figure out their go-to-market strategy, and another founder will walk by and say, oh, I just had this challenge last week, right? And so some of that magic is the community, is building that network of other founders around you. But then also bringing in folks like mentors, which folks like yourself, because you mentored at Texas.
Yeah, absolutely, absolutely.
And so bringing folks like yourself who are subject matter experts, who are early stage operators who've been there and who can kind of tell you like, you're not crazy. I think that's the first thing I always want to tell founders, like, you are not crazy. You probably are crazy, but not for that reason, right? Like you're not crazy, your vision is big and audacious, and I want you to have the right people around you to support. So Techstars, global accelerator platform, they run programs. Right now, I think they have applications open for a couple of different programs across the country. Techstars Atlanta is interesting because we were originally Techstars was brought to Atlanta by Cox Enterprises.
Talk about a power move. I
Yeah.
so appreciated Cox's leadership as a private company saying, you know, let's build out the ecosystem even further. Let's also add Techstars to the mix. And such a valuable thing to do.
Yeah, and I think Cox is just an amazing partner overall across the ecosystem.
Absolutely.
You know, I have seen the work they've done with Engage, the work they did obviously with Techstars. I'm seeing what they're doing now with Generator, with the clean tech program.
They were our first sponsor at Startup Runway too, which gives away 10K grants to founders who are underrepresented, of color, Hispanic background, female founders. And Cox was the first to really see that. And since then, glad to say, joined by many other amazing partners. But Cox taking that first step, it's really a bold and great move.
Yeah, and that's also part of who they are, their legacy of their company, you know, is again, it's entrepreneurship. I think we always think about innovation and startups as like the tech space, but it really is, it comes down to entrepreneurs.
Yeah.
And it comes down to these are people who are first movers, you know, like when you think about like Atlanta's, I think biggest success story will always be Coke. That is always like the Atlanta Coke is Atlanta. When you think about that, like at the time that was invented, that was groundbreaking. The way in which the whole story about Coke coming back, that was very groundbreaking. The brand in and of itself. That's entrepreneurship. That's innovation. Innovation has existed long before computers. Right? There's always been innovation.
Well, I love Coke, but I don't want to put any ceilings on the entrepreneurship in Atlanta.
No.
I'm of the mind, I mean, and maybe VCs just have to be this way, but I think the best is yet to come. Some of the most exciting companies I've seen, I mean, they're small relative to global like that, but they have a lot of global potential. And I really think we have a lot to look forward to.
Oh no, we have a lot. I've seen so much interesting stuff pathway, which we
Yeah,
can dig
we can
into.
get to
I'm like,
that.
because we're getting
But
ahead of ourselves, we're talking about Techstars.
Founders need to know about Techstars is it's a community.
Yes,
So there's a lot of peer learning, there's mentor learning.
yes.
Tell me about the role of the managing partner. Is that the formula?
Yeah, so the program that we're doing, there's a managing partner. It's a little bit structured different than our partner programs, so we've had like Cox or someone like Stanley Black and Decker come in as a partner. So this program is for the community, by the community. It will be locally governed and operated, which is, I think,
That is different because
Very
it doesn't have a sponsor sort of
not a part.
setting a direction.
We get to set the direction for what we think is best for Atlanta. And what
Wow.
we
Yeah.
works well for Atlanta. I got a lot
Yeah.
of pressure on me coming into that kind of space.
Yeah, but that's a huge opportunity.
Oh, of
Because
course.
you know what? It is high time that Atlanta said it
Mhm.
when it comes to entrepreneurship and startups.
Yes.
I think that there's been a history of a sort of profits from here are not, respected in their own community. And so it's like, well, what are they doing in Silicon Valley? What are they doing in New York? We need a conference like the one they have over there somewhere. And I completely don't believe that at all. I am long on Atlanta. I believe that we have the founders, the talent, the corporate support, the know-how. And I mean, I know we have a lot to prove, but I think the only way we're gonna win is doing it the Atlanta way.
100%. And that's also how I feel about it, right? I don't think we should look to the valley and try to emulate what they have
No.
done. We don't have the same history, we don't have the same
No.
culture. And I think that's the thing people don't realize. You can't replicate what New York has done, or Boston, or even Miami.
We also have such a strong culture here. That is an asset. Culture may be the only, David Cummings has this quote that culture is the only thing that you can't it's the only competitive differentiator also.
Yeah.
Because your code, especially in the age of AI, someone else can code it, someone else can sell it well, someone else may have the idea because a lot of ideas, they're not unique.
No.
But culture is a competitive advantage. And what he says is it's the only one under the control of the entrepreneur.
Yeah.
I love that. I
love that. Because that's so true, because when you're building a company, the culture will dictate how far the company can go. A lot of people don't think about that. If you have a company, the company culture is toxic. But I think Atlanta, when we talk about it, Atlanta's best and biggest import is usually that.
Yeah.
At the end of the day, because there's so many facets of American culture that actually are rooted in Atlanta that I think people don't think of.
I think you're right. And really where the rubber meets the road sometimes is I think investors don't necessarily think of it. There's venture investing really started on the East Coast. If you look at the history, it made its way very quickly through some of the great families to California, but it never really came back into the South. And so I think a lot of the great investors in our region, they participate in things like real estate, private equity, and those are very visible here.
Yeah.
But venture is sort of an overlooked area. What do you think investors should know about Atlanta?
I think they should understand that there's a lot of opportunity. And I don't think it's opportunity in the traditional sense where they're looking for the next open AI. Like, is there the next open AI here? Probably, yes. But I think what they don't realize is that because of our unique culture, our founders are scrappy. Like, I love Atlanta founders because they have a different than I've seen in some of them. And a lot of that comes out of being an undercapitalized market, and you got to do what you got to do, but you got to figure it out, right? I think the other thing is the talent pool here. I was actually talking to a friend who's an investor, and she's based out of New Orleans, where I'm from. And she and I were talking, and she said she was at an event in New York, and she kind of got upset because they were talking about the South, and they were talking about the education system in the South, and they were talking about schools in the South and what they do wrong. And she was like, none of them were from the South. And I was like, yes, because there's always there's
a bias against
the
South.
There is, but you have some top tier universities.
Yeah, the facts don't support, as an investor, the facts don't support that bias. I mean, there isn't a history of returns from early stage tech startups in the South like there is in some of the other regions. But you have to look at the fundamentals analysis. The economy in the South is growing faster than any of the other regions. Now, that's just a fact, and it's a multi-year long-term fact. It doesn't really seem to have an end date in the near future. And if you've got a booming economy, that's the rocket fuel entrepreneurs use to launch companies.
Yeah.
So I think that's number one. Number two, the South's rates of entrepreneurship outpace all the other regions. And yes, California may be a gorgeous outlier in the West, but that is not the regional strength we have in that can-do attitude, and the entrepreneurship rates are incredibly high. And then the other thing that to me is incredibly compelling is this region, the South, has the lowest unemployment rate of all of the regions.
Yes.
So not only is our economy growing faster, it's employing more people productively. And those fundamentals, you can't overlook as an investor at any stage, but especially in startups, especially now with AI fueling startup growth and making coding faster, stronger, better, easier. Entrepreneurs with great ideas can build faster in better economies, full stop. And I think investors have missed that equation. And if I could do one thing, I'd put it together for them and say, look, you've got to look at the South. And you should look at the South broadly. You need to be in several funds. You need to be diversified. You need to take a big bet on the big growth in this region.
And I think too, when you talk about the growth in this region, one of the things that kind of helps balance that out is that it's still relatively affordable.
Yeah,
you know?
absolutely.
So you can be a founder, you can be someone who came out of corporate and your money can go a little bit longer, and you can be a founder and you can build without having to raise the same amount of capital at the earliest stages as someone in the Bay who has to pay themselves to live in the Bay. You know?
Absolutely. And that actually plays out really well for the investor as well. So we had Peter Walker from Carta who does these amazing graphs and charts. He's magical.
Yeah.
So last year he was our keynote speaker. We're a Carta fund at our annual meeting. And I was like, I really pressed him on, please bring some unique data because he's going to run some unique queries for us. And one of the things he shared is that in the South, founders raise at a valuation that is about, this is an average, your mileage may vary, but about 50% lower on average than in the West.
Yes.
Number one, that's not that much. But if you're an LP, that's like somebody handing you back 15 cents on every dollar because you invested at a lower valuation at that first round, as long as that can be maintained. And there was not a similar discount on exits. So the exit market is a little more multinational.
Right.
It might not be global, but it's very multinational. And when you get bidding going on at an M&A moment, there's a price and the price can go up, up, up. So it's interesting. You actually get in potentially at a lower average cost, but that doesn't come into your discount at the final stage.
No. And that's something we've been talking about a lot internally with the board at Techstars. We're talking about making the case for the Southeast.
Right.
And I was like, you can't overlook that. From an investor, if you are an LP, you cannot overlook that. And I get it that, we're a real estate region. I get it. But you have to diversify your portfolio. I don't want to have all of my money in real estate. I don't want to have all of my money in anything, And venture, I think, is a great way for you to say, number one, let's just diversify. But then number two, for you to say, hey, how am I betting back on my community? Right?
What you just said is so important because venture is nascent in our region. I mean, I'm speaking as one of the first fund founders, and I can say that there have been different tiers of times where a few venture firms have come up and then they've pulled back or they ceased investing, people age out, but we have not created a sustainable, scalable venture capital environment across this region yet. So that's a huge opportunity. I'm crazy excited about it for both of us, but I have to call a spade and say it is early days in the glorious golden age of venture capital in the South. And so for an LP, what that means is be aware that betting on your community is a part of that bet because there's a lot of volatility and choppiness in returns in an emerging market, which honestly, I say that all the time, that the South is the safest emerging market because we've got all the benefits of being part of the US and all the boom of being an emerging market.
Right.
So but still you need to kind of embrace that. And so I think the right investors in this region, they're greedy. They want to be a part of the boom. they're interested in early stage pop, but they're also like, you know what, this is my community.
Yes.
And if I can create more wealth here, back a founder that's here, they don't have to leave here to get those
Mhm.
first checks, that early mentorship, that accelerator experience. If they can stay here, then they can exit here. And the wealth stays in the community.
Yes.
And that's, to me, also incredibly important and worth doing.
Yeah, and that is one of our really big tenets with Techstars Atlanta. Is
Yeah.
about start here, stay. You have a lot of folks who do build their start here, and then if you're building a startup, you say, okay, I have to move to New York. But she's doing that mainly because she needs to go where the capital is, right? And she needs to expand to where the capital is, because we do have a dearth of.
We have gaps.
Right.
B2C, early stage, Atlanta's really bad for that. right
No.
now. I mean, that's part of the bumpiness and volatility
Mhm.
of not having a growth stage
Right.
venture ecosystem. We're an early stage venture ecosystem. We're nascent.
And even in the early stage, though, you see that there's gaps on the pre-seed side. I think we're good at seed and maybe say,
Not at B2C.
well, no, in general, I think we're not good at consumer. I'm gonna just, that.
I mean, there's Silicon Road, there's a
Right.
couple great, but it's not like there's 5 choices that
No.
a founder has.
No, and I would say this, we're good at what Atlanta has a legacy in, right? So when you think about Atlanta, we have a high density of like your Fortune 500 companies. That would lend itself to having more.
B2B enterprise. Right, that's where we focus. Absolutely. Yeah.
Because it's easy for me to say, hey, we got Coke, we got Delta, we got
customers
I
here.
got all the different customers that you could ever want, you know? I think from a consumer standpoint, there is some really interesting stuff that's happening. Most of it is on the creator economy side. Like I know the folks at Trillis, they're looking at stuff on the creator economy side. Talked to a couple folks, because a lot of those creators, we think about like TikTok and Instagram, a lot of them live here. Some of the top creators. And so you're seeing more of the nuts and bolts on that side, and then more consumer targeting young people who want to join the creator economy. But outside of that, I think consumer is just difficult for us to support in general. It just is what it is. LA does support consumer a little bit better, I'm gonna be honest. It has to do with who lives in LA.
Absolutely.
That's what that is. But I say that to say that there still are some gaps in the pre-seed side. So you say like, you know, you have Silicon Road, I love them. I want them to get back to the fundamentals of angel investing, which means that it is inherently risky. And I cannot ask for seed stage growth from an angel stage company, from a pre-seed. And that's all I'm gonna say. That's all I'm gonna say on that. Like the number of people I know who pitch the angel groups in town and come back to me and they're told the growth that they need to be hitting to be entertained by the angel groups. And I'm not gonna say which groups because it's not important, but there are some groups locally that require a certain amount of like cash in, and that more of where you're investing at, you know, than like where a traditional angel should, because you know, angel investing is more of, I love the founder, I love the idea, you need to get to customers.
Well, I feel that, you know, everyone writing a check, they write a check on their own business.
Yes,
Whatever that
agreed,
is, whatever that is. And so what I will say is, I've been very excited by this last couple of years because of AI and how quickly you can get to an MVP.
Yes.
Without capital. So for those very early individual investors and angels out there who are starting to require a certain level, obviously it's up to them and their internal thesis about what that level is. But Valor has also raised our, not revenue as a number, but growth. And we want to see substantial month over month growth, and substantial does mean double if not triple digits. Month over month.
Right.
Now, there's no base that we have in our mind, like, oh, if you don't have MRR, don't talk to us. No, there's no number there. Actually, there is no number there. Talk to us before you have revenue. That's great.
Right.
But once you start making revenue and start learning and kind of start feeling that this is who you want to be as a software company, that growth is more possible now because AI can code a little bit faster. So yes, we're in B2B and
Yeah,
it's
yeah,
different
yeah.
in different markets, but I do think it's far ahead of founders 10 years ago in their capital needs relative to their revenue performance.
So I agree with that, but what I'm saying is that when we talk about like the pre-seed stage, yes, you need to have growth, and I think to your point, there is no, it's this percent. Because that's gonna look different for every company, right? Showing me that you have momentum, showing me
Yeah.
that you have traction, I think that's gonna be different for every company, right?
Absolutely.
But I also think that if I'm expecting a company who has an MVP to have a certain threshold of revenue as an angel, I'm using that as, I'm using revenue, which again.
Which it is.
Yeah, it is. It is, but as an early stage company, you and I also know that you can have growth, you can have revenue. And something can happen and the company still can fail.
Absolutely.
Right. So it's hedging your bet a little bit, you know, but that's where you see that gap again, because it goes back to the gaps in the market. That's part of where you're seeing that.
My
gap.
meeting just before ours was with a Series A lead, and they were talking about how, and we were both discussing that there's a lot of high revenue early stage companies these days that we still believe will fail.
Yeah.
Because they're building a tool, AI, that in a couple of years,
Yes. Yeah.
people will realize they can write their own tool.
Right.
They don't need to pay Joe $10 a month for that, you know.
I can do it myself.
Yeah, might as well, and it'll work better for you.
Right.
know? Yeah.
It's also, so it goes into, are you building a product in a company, or are you just building a feature that's an add-on?
Right,
Because
yeah.
somebody could.
Even if it has revenue.
Right.
There's a lot of B2B SaaS companies now that are feeling the pain
Mhm.
of AI eroding what they thought was a cash cow.
Yeah.
But yeah, it's interesting times to be an investor.
It's exciting.
fun,
though.
yeah.
No, it's exciting. And I think some of that volatility is some of the part that makes.
That's
it
how you make
exciting.
money.
Right.
Yeah, absolutely. I mean, yeah.
You know,
Yeah.
some of that, like, it's exciting because it's so dynamic. It also gives you an opportunity to kind of see different markets and learn. Like I tell people all the time, I'm learning something new every day that I'm talking to a founder. I'm learning something new every day I'm talking to other investors, because I love like listening to you and hearing your perspective on things is also giving me thoughts of like, okay, when I get home, I need to look this up, I need to dig into this. Like some of this data,
It's
I'm like,
one of the joys
love
of being a developing ecosystem. Our community is getting so rich. It's getting so diverse and full of cool perspectives. Every time I get together with the growing of Atlanta investors, that there's actually stories to share. It used to be 10 years ago, 5 investors in town, they have one story, they all know it, you know, whatever. It's kind of like they're on the one chat thread. And that's not healthy. And now there's enough investors. I mean, I think Atlanta may be the GOAT of female managing partners. You know, for example, per capita, we have so many funds led by women.
Yeah.
So there's a lot of interesting conversations even among the growing investor community here.
Yeah, and I tell people that's one of the things that if you're a founder and you're looking for a home, right? I think that's one of the things that makes Atlanta unique. You know, I was at AWS, did a boot camp last week, and it was underserved founders, and they were from all over the country. I was very surprised since they were doing New York, Atlanta. I think they're also doing one other US South and then some stops in Europe. And we had folks from the Bay Area coming in, and they were so excited to be in a room where they felt seen, they felt heard, they felt safe. And they have that same reaction when they meet with investors, right? We have a higher concentration
We
of
do.
female managing business, you know. To like I mentioned earlier about the creators, right?
Yeah.
Like some of my favorite creators, I end up finding out they live in Atlanta, and you're like, oh, because you see in the background, you know, you're like, oh, that's Atlanta. And I think those are things that we're leading so many conversations that people don't realize it all started. It's starting in Atlanta and then it's being out. What is it? Atlanta influences everything.
Yes.
It's the city.
Yeah.
Thing here. And I would say, yeah, there's a lot of truth to that. And that is why founders are attracted to Atlanta. Because I talk to founders all the time who want to move here.
Oh, another stat,
Yeah.
I was talking about those 3 big stats
Right.
earlier, but there's a fourth. The South is attracting more people moving in than any other region, and it is a net importation of the rest of the US.
Yeah.
No matter what, that has been a multi-year trend.
Mhm.
So there are always going to be people who do leave. Yes, of course, it's normal. But the net is that this region has the greatest inbound.
Mhm.
And that's because of lifestyle, it's because of culture, it's because of a lot of things, cost of living that you brought up. But this is a destination.
Yes, yes. And I think the other thing, I was doing some research on Braintree, because everybody talks about the Georgia Tech kids who leave town or the UGA kids. That's actually changing.
Oh, absolutely.
That's
Yeah,
changing.
say more, say more.
So more of the student population in the Southeast, they're staying in the Southeast. Now, are they maybe leaving Atlanta and going to Charlotte? Maybe. Going to Tennessee, Miami, but they're staying in the region.
Yeah,
Because to your point, there are more companies coming to.
well, and all the
region.
good teams are here, less offended. Okay. But yeah, the culture is vibrant and
Right.
it's worth staying.
And it also is like, I think the big thing is the weather. Like, that's another thing. I always tell people I'm spoiled here. I could not do winter in New York.
Well, you know what else is kind of funny? It's like we all lived together through the COVID experience.
Yes.
And such a blessing that we've
Mhm.
moved on. But what I have to say, I mean, it's great to see America being healthy. I mean, that was awesome. That
Right.
lockdown. But the Northeast and the students there had such a different experience.
Yes.
Students in the South, and it was very public, and it was very obvious. And I think that really settled into the Gestalt mind as, okay, when bad things hit the fan, the South is going to be a little freer environment than some other
Yeah.
more
Yeah.
urban cores.
Yeah, and I think it really comes down to, like I said, it's the weather at the end of the day. Like, I worked in the fashion industry and I would tell people I hated going to New York in January. I know a lot of folks who come from New York and they love the weather here. And that's just like anecdotal, but I think it really comes down to, you can build a life here,
Yeah,
and you can build a life here that is meaningful. And you can build a life here that feels good for you, your family, and you want to bring in your talent.
yeah.
So I think that's the other thing. You want to have a company somewhere where people want to live, where people want to grow, where they can grow, where they can expand.
So
You know?
what do you foresee for the evolution of venture startup communities over the next year or so? We're going into a big year. In your relatively new role, as managing partner at Techstars Atlanta, what is the future you're trying to bring about? What are the threads you're pulling on and getting excited about?
So I think it's all the things that we've kind of discussed, as we've gone about. It's pulling on that thread of the talent that wants to stay here and wants to build, whether that is getting a grad from like Spelman to come in and run your marketing at your startup, or getting someone from Morehouse, because I've met some really sharp entrepreneurs from there.
And they have a great private equity program.
Yeah.
Too. Yeah.
Oh, that's a whole different conversation, because I tell people, I'm in a group chat with the folks who are in VC here. And I'm like, yeah, a lot of them went to Morehouse, Spelman, FAMU. The HBCUs are very well represented.
Yeah.
So don't ever sleep on an HBCU grad. Like, there's Kamala Harris went to an HBCU for a reason. And she got to where she got and she did great. But I think when we talk about it, so it's the talent, right? It is, how do we take what we do really well in the talent and bring them together? How do we take what we do really well from corporates? Because you mentioned Cox and the innovation that they've done. You have so many corporate leaders in Atlanta who are really doubling down in the city, on entrepreneurship in the city and on innovation in the city. And they want to be a part of this, and they want to be a part of that charge. We're going to bring them into it. You have investors, and I tell folks, we need to do such a better job of sharing deal flow with each other. And so I'm going to make that easier with some of the stuff that we're going to put together with Techstars, because I want you to know that, hey, we got pre-seed seed stage companies that will be coming out of this program. That could be a funnel for so many of the funds in town, where you don't have to go out and say, I got to do the FOMO deal from the Bay. You can still do it, but you don't have to say, I have to go searching for great deal flow. We're going to work with not just our program, but I want to collaborate with some of the other programs in town, so that we can make sure we're showcasing all of our companies in an effective way. We did something like that in Alabama when I was there, and it was amazing. It was such a good, like, it was a good turnout, good vibe. Really excited the ecosystem and got the investors. We had a ton of investors from Atlanta out too. So we're gonna be pulling all of those things, but then also when we talk about the LP perspective, the Southeast is a great place to be invested. You should be looking at several different funds at several different stages across the region, whether they are industry specific or agnostic, whatever floats your boat. You should be looking at the different funds around this region, whether you're local to here or not, right? And so we're pulling all of that together because we understand Atlanta's superpower is that collaboration. We understand the superpower here is folks like yourself who have been in the game and who understand it and know it inside and out. And can come and talk to a founder and lay it out for them and say, and be honest. Because
I get high points on being honest.
no, because you know what you're, let me say this, that's the being humble. You know what you're doing and you're very honest. And I think we need more of that. We need more of that directness when talking to our founders and telling them how to get prepared for investment, right?
Yeah.
Because I think that's another gap that is in the
Or
market.
if they want to take VC or not, and I think that's always a conversation worth having with founders at the early stages, because VC is this very specific flavor of capital. As you well know, it comes with a lot of conditions and expectations that may not be aligned with the founder's dreams. You can build a great company without VC, even in tech, and it's done all the time. And so I think it's really important. There's a almost a spiritual match between certain founders and venture capital. They want that specific type of partnership. A piece of that table is enlarged by having that kind of presence and drive and momentum. And for some founders, it's really not that. And so that's critical in early stage programs to spend some time with that and get some experiences from other founders who had successful exits with VC, without VC, different experiences.
So you said it, so I don't have to say it this week on LinkedIn. Because that is like my weekly announcement that, to your point, venture is just not a fit for every founder. It's not a fit based off of what your vision is, who you are, how you're trying to grow your business. And that's okay. That doesn't make you
really
less successful.
Absolutely.
It doesn't mean, I think we've made VC very sexy. And it's like
VC has spent some money as an industry. To your points about LA and California, I feel that they've spent a lot of money.
Yes.
And VC very sexy, and mostly to attract capital, honestly. I mean that, and so that needs to be understood. VC is in a way a cottage industry, always will be. There's maybe almost 1,000 active firms now. Almost 40% of VC firms shut down the last couple of years.
Yes.
And so very few firms, and when you think about the average VC, they're not NEA, which is one of the large, amazing ones, or KKR. They're small, they're boutique, they're 5 to 10 people, they're Valor size. There are VCs, of course, smaller than Valor. So when you look at that type of an industry, it had to do something to differentiate itself. But VC is, it shouldn't be the sex appeal on your cap table. It should be hard working dollars that have a goal for you that you well understand. And also you have chemistry with their culture, because they will be on your cap table as long as you're CEO. So there's that.
Yeah. And I think that's the thing that I always tell founders, that when you go into meetings with investors, that it's not just about the capital, it's about making sure this is a match. Absolutely. And this is a right fit for you. Yeah. And making sure that the investors in that team are a right fit for you, particularly at the early stages when investors tend to be a lot more hands-on and there's a lot more support that.
Well, it's interesting, they should be. I mean, I will add, as our students developing, we do still have a lot of earlier stage investors that are fairly hands-off. Those I truly do think of as angels, because they're just trying to put some capital in and they're hoping it goes well. And for some founders, that's also perfect, because they don't want any, per se, control. But the level of daily, weekly, monthly cadences that your investor believes will help thrive, that's a great conversation for every founder to have with their major early stage investors.
And I think that's one of those things, as you're having that conversation, vetting them is where you should, because I want to make sure that founders know that's part of the conversation when you're getting to know the investor. Not just after they've cut the check, like you want to make sure that you get to know this investor, know their process, understand how they work with founders that are in your portfolio. Because again, I love that you said it's like the spiritual match.
Yeah.
And that's really what it is. It really is like you have to understand that the vibes are aligned
Yeah.
between you and these early stage funds that you're out for. And I think a lot of founders, they get to points in times of desperation and they just want to take money. And it's
And
like,
there's investors for that as
Right.
well. And they come with 2 and 3x preferred. You know, to your point, it's one of the reasons why I've made or tried to make a big deal
Mhm.
out of Valor, marketing the fact that not only is our name Valor, but we call ourselves the community of courage. That's our tagline. Because our culture and our values are aligned with that courage and jumping in and taking a risk with the founder, side by side. We've taken a risk, you're taking a risk, we're taking a risk together. How do we be successful together? Courage underscores a lot of how we invest and how we look at that future opportunity together. And for some founders, that's already too aggressive.
Right.
Yeah, and we are aggressive.
Okay.
Yeah,
That's
it's not for
okay.
everybody.
Right. I always tell people you can be the juiciest steak, you will always have vegetarians that exist. And so you have to understand that it's about a match. It's not just about seeking funding. It's about making sure that we are aligned
Yeah, absolutely.
on the vision. Because again, most relationships with your investors last longer than the average marriage in this country.
It's so true.
That's sad, but it's so
It's just harder than to get an investment
Right.
harder than the other way.
Yeah.
I know.
But when you put it into that perspective, you understand that you are looking for someone and you're looking for a firm who's a match for you and for your business and where you want to go. There have been so many stories more recently about founders who have raised venture and then had to shut down their business because they took money maybe from investors who started pressuring them to do things that were not aligned with their vision for their business. And it's like, that's why at the beginning stages of this conversation, you want to understand how this person thinks, what value they can add, all of the different things as you're going through those conversations. And I would say, when you're an LP, you also want to do the same kind of things. You want to make sure that there is that alignment with what you value, because again, we were saying earlier, it's about community, right? If you're an LP, you're investing in Southeast, you're investing in building a decent.
And what is the culture of the community you want to build?
Yeah, and what is your vision and how does your vision for that community line up with that fund manager's vision? Right.
Yeah, there's a lot of LPs that would probably say they don't necessarily, they're doing diligence in a very financial, technical way, and yet, they haven't thought of it in the way you just framed. But that's an opportunity too.
Yeah.
I mean, if you haven't, that's because you might be thinking the markets you're in are saturated, the cultures are done, and this is the menu. But in Atlanta and in the South, we're still chefs in the kitchen building that experience.
Yep.
And so I always say, LPs that want to write checks in this community, you're welcome into the kitchen. What do you want on the menu? What kind of flavors are appealing to your entity? Because we're still at that stage. And it may be honestly the last place in the United States where there is the booming economy and the opportunity to scale a venture culture. I mean, yes, there's places that don't have venture, but some of those places will never have venture.
Right.
They don't have booming economies. They don't have the infrastructure at the business level to create generational wealth.
Right.
But this region does, and it's still being created by the people who care about it, which I can't wait to see what happens with Techstars in the coming year. And I'm really glad you sat down to give a little preview of how you're thinking about it in your new role. And is there anything I should have asked you?
Ooh, I love when people ask that question because then I have to kind of like rewind the whole conversation. I think we talked about what founders needed to know, and I feel like we jumped into some other conversations. We meandered, but it happens. I think the most important thing that I want founders to know about Techstars Atlanta and what we are building is that we are building a solution for founders. founders are the people that we are building for. Yes, we have other stakeholders, obviously, but at the end of the day, this is about giving founders the best possible experience and giving them the best leg up when it comes to going out into the market post program. So it's really come to me with, you're a little bit early, but I still want to track you. I always tell people the founders that I get that have been the best performing from the Techstars programs have been founders who have been bugging me and on my calendar, and I meet with them every month, and I have no idea why they're on my calendar, but they want to talk through things around customer discovery that they've learned. They want to keep me up to date in their business. They want to get my thoughts on things. And eventually you see how they use all of the insights they're gathering to iterate over time. And you're like, okay, this is the line of all the different dots of our meetings. You need to be in a program. And if it's not mine, I got you somewhere else. You need to be in an invest, and I can say, hey, let me tell you my friends who are doing later stage investments. It's easy for me to refer you for deals, because you have done the work and you've shown the consistency. So I think for founders, it's really all about the hustle and reaching out and getting on my radar now.
How do founders get on your radar now, Anastasia, since you mentioned it?
LinkedIn. So, okay. So I always tell people, find me on LinkedIn. The things that you need to know is that my picture will always be different hair because I changed my hair up because it's fun. I can do that. So
Anastasia Nicole on LinkedIn.
Yes, Anastasia Nicole Simon on LinkedIn. And then I don't know what the picture is this week, but it's a different, every time you see my headshot, it's a different hair.
So is there a Techstars Atlanta site they can go to as well?
So there's Techstars Atlanta is also on LinkedIn, so you can go there and we will post different things. I also post office hours on LinkedIn quite frequently.
Great, so grab some office hour time.
15 minutes. I'm very efficient in 15 minutes.
Now, some people feel like, do you want them to reach out with a message or a connection request? Because people have different vibes about that.
Yeah. Connection request. I'm not gonna read the message. I'm not gonna read the message.
That's important because you have some polite founder writing you a message you'd never see.
Right.
Just reach out and connect. Tell them you're tell you I'm a founder, I'm interested in what you're doing.
And again, I usually post once a week the reminder around office hours.
Great.
That is a free slot on my calendar. I do them every Friday. You get 15 minutes. We will go over one question. I always tell people I'm very oddly specific on the one question. Do not ask me go to market strategy. That is not
seriously, that's not what that's a PhD.
Right.
I mean
that's a 90-minute session at min to go into that. We got 15 minutes. You tell me what's the one burning desire question, whether it's something about Techstars, VC, something feedback on your pitch. I can do pitch feedback. I also can do feedback on your go to market strategy, but be prepared to present it.
In 15 minutes. You better be.
I did it in 5. I did it in 5 minutes, and then the rest of the 10 we're gonna dissect it.
Do you have favorite books for founders? They get a sense of the books you really like.
So Venture Deals, I always tell founders to read that.
I guess you have to say that, right?
Well,
I pay you every time. That just cuts you a little.
Right. No, I wish. I actually love it because I tell people, so I didn't come from a traditional finance background. Venture Deals and Secrets of Sand Hill Road gave me a really good understanding of VC as I was working and learning, because it's mostly an apprenticeship business.
It sure is.
So I would say both of those. The thing I love about Secrets of Sand Hill Road is that he changes out his pronouns. So there are female CEOs. Who knew? They're female investors, and I think it didn't trigger until I was listening to it. I was reading it and I was like, let me just listen to the audiobook. And he was like, the CEO, she, and I was like, what do you mean she, the CEO? That's wild. I've never, and so I always tell people, female founders, it feels good to have a man who's been in the industry for years, who wrote that book, to acknowledge that you exist.
Yeah.
And so those two are really good. The Mom Test, I always tell people read that one. That's a very good book for customer discovery and getting critical feedback. I don't know whose mother they are talking about. It does not have critical feedback. It is not my mother. But I can tell you that in general, the whole premise behind that is it's hard to get your mom to give you critical feedback. So this is how you should structure questions. It's immensely helpful for early stage founders. Another one, so KP Reddy's book, everything you know about startups is wrong. I just love that because he goes into his unique experience
Yeah.
and he tells you the truth about building a business and how sometimes your life can fall apart because you're not prioritizing correctly. What does prioritizing correctly mean for you? That means something different for everyone. But I think he has some really great stories and there's some really good life lessons. And then I also tell people read fiction. Fiction builds empathy. So I will always tell you between the business and the startup and the lean startup and all these different things, read fiction because you build empathy through that. That also is a great way for you to get and refine your perspective on the world. So I read a ton of fiction. I think the last book we read, so my fiance and I read sometimes together, which I read very fast, but then I stop reading randomly for 3 or 4 days in a row, whereas he reads consistently. And so the last book we read, what was it? It was about a Native American vampire
Okay.
in like the wild. It was the most insane. It was called the what was it? The Buffalo Hunter. And so it's about like this early.
It gets you right out of your everyday.
Right.
And right into
And it was
something,
just
yeah.
like one of our friends, her husband was talking about it, and I was like, I'm a spooky horror kind of vibe. So it's like vampires, okay. And then he's like, yeah, it's like this guy, and he's indigenous, and he's a vampire. And I was like, sold. So we immediately go and get the book. And as we're reading, I'm like, this is wild. But it was like a great break from reality.
Absolutely.
And again, stuff like that.
I'm down for
informs
some
your perspective.
escapist reading,
Yeah.
100%.
You need it. Instead of binging Netflix, go
Yeah,
watch it.
well, there's not enough Netflix in the winter.
That's a whole different.
No, I actually, that stuff about like when you go to sleep, if you're watching TV or Instagram or whatever you're doing, it kind of can be keeping you up.
Yeah.
I believe that. I don't know that it's scientifically true, but since I believe that, I do tend to read before bed every
Mhm.
night. So I'll have about 30-45 minutes where I'm just reading. And I definitely have a business book open, and I might choose that depending on my mood,
Mhm.
or have a fiction book, or sometimes I
Same.
read the news, but the news can get me down, so then I go back to some fiction. Anyway, this was such a great
Yeah.
conversation.
And who knew it would end with vampire hunters? There you go.
You will love so heard you on the podcast because they'll be like, I read that Buffalo Hunter.
And you're gonna be like, wait, that is the wildest thing. It's either that or they're gonna tell me when I do stuff, I talk to people about anime because I'm really into anime. And I'm like, I know who's an anime fan because I have an anime tattoo and they can see, and people will call it out. So I know you watched the podcast and you got to the end. If when you see me, you ask me about my anime tattoo.
So we'll talk about waifu and other interesting things in the anime AI world. Next conversation.
Yes.
I'm glad you could come.
Thank
for
you.
joining me.
No, thank you for having me. This was a joy and a pleasure.